Imagine getting paid every single month without lifting a finger. That's the beauty of dividend investing. Your portfolio works for you while you sleep, generating cash flow no matter what the market is doing. Welcome to the channel. I'm the Swedish dividend investor. Today I'm revealing the final part of my dividend portfolio, breaking down the stocks that pay me passive income every year. If you're new here, hit that subscribe button, check out my previous videos, and let's get right into it. Position number 10. Altria. One of the biggest names in the tobacco industry. Altria is best known for its strong dividend yield, often exceeding 8%. Despite declining cigarette sales, the company remains profitable through price increases and its stake in Anheuser-Busch InBev. It also explores reduced risk alternatives like nicotine pouches and e-vapor products. Altria is a classic high-yield, cash flow-rich dividend stock. I said it in my previous video and I will say it again. I love my SIN stocks. I've held them since early 2021 and they are one of the biggest dividend payers in my portfolio. 3.32% invested capital, and my yield on cost is sitting at a nice 9.06%. My yearly income is $334 and some change. My total return is 56.78%. Now, from one controversial but profitable sector to another, gambling. My next position is a leader in online gaming that's taking the industry by storm. Position number 9. Evolution AB. A Swedish company revolutionizing online casino gaming with its live dealer and RNG-based games. Evolution has grown rapidly, expanding across Europe, North America and Asia, with strong profit margins and consistent earnings growth. While not a traditional high dividend stock, it offers long-term dividend potential through its aggressive market expansion. This is a new position since January. They are pretty undervalued, and the growth of this company has been amazing. When I did my calculations, I used very conservative growth numbers and it still was showing undervaluation. This is a mix between growth and dividends and I'm planning to hold for a long time. As the making of this video, I have 3.37% of my invested capital here. The yield on cost is 3.81% and I'm averaging down to push that yield on cost to 4%. The yearly income is roughly $128. My total return is minus 4.82%, but that will probably go up once I get the dividend in May and over time. While Evolution focuses on gaming, my next position is all about passive income and cash flow. Let's talk about my favorite covered call ETF. Position number 8. JEPG. This ETF combines equity investing with options premiums, providing both market exposure and a steady income stream. Managed by JP Morgan, it aims to generate monthly dividends while benefiting from long-term stock appreciation. JEPG is a solid pick for passive income seekers who also want equity growth potential. Yes, this is the final covered call ETF in my portfolio. This is the first one I started investing in. And it's the gift that just keeps giving. I haven't added to this position in a while, but since both the dollar and the euro is lower and the share price has come down, I'm planning to add pretty substantial amounts of money here. At least $10,000 in just this ETF. I have 3.76% of my capital invested here. The dividend does vary, but my estimated yield on cost is 6.37%. And I'm earning about $250 per year in income. The total return here is 3.79%. Now let's move from ETFs back to my SIN stocks. This time a company that pays me more than any other stock in my portfolio. Position number 7. British American Tobacco. A global leader in cigarettes, vaping and reduced risk nicotine products. British American Tobacco offers a high dividend yield of around 7 to 8%, making it a strong choice for income investors. The company has been shifting its focus toward new categories like e-cigarettes and nicotine pouches, ensuring long-term sustainability despite regulatory risks. Yes, another sin stock in the leaf industry. And this is my biggest dividend payer, even beating my number one position. I have 3.92% of my capital invested here. The yield on cost is 9.03%, and my yearly income from this bad boy is $426. The total return is 44.13%. Alright, let's switch it up from tobacco to something a bit healthier, food and agriculture. Position number 6. Archer Daniels Midland. One of the largest agriculture and food processing companies in the world. ADM benefits from global food demand, biofuel expansion and sustainable agriculture trends. With a strong dividend history, low volatility and exposure to essential industries, it's a solid defensive dividend stock. A newish position here as well. I bought early in 2024 after following the company for a couple of years. I keep adding as they keep dropping. Their outlook for 2025 wasn't good, but in my eyes, it wasn't too shabby either. The market compares the high numbers from 2022 and 2023, when inflation was high. I view it as a return to baseline. Currently, my invested capital is sitting at 4.2%, with a yield on cost of 3.92%. The yearly income is $157, and my total return is sitting at a minus 10.5%. From food to something just as essential, telecom. Let's talk about my long-time holding. Position number 5. Tele2. A Swedish telecom company providing broadband, mobile and TV services across the Nordic and Baltic regions. Known for its stable cash flow and strong dividend payout ratio, Tele2 is a defensive play in the telecom sector, with a focus on efficiency and market consolidation. Nothing much to add here. They have been in my portfolio since 2020, and their dividend has been great so far. I have 4.24% of my capital invested in Tele2. The yield on cost is 6.45%, and my yearly income is around $273. The total return from Tele2 is 57.2%. Speaking of essentials, what's better than a good drink? My next holding is a Swedish classic. Position number 4. Kopparbergs. A Swedish brewery famous for its cider products, particularly in the UK and Scandinavia. The company operates in a niche market with strong brand recognition and solid profitability. It has historically been shareholder friendly with consistent dividend payouts, but it is subject to seasonal demand and currency fluctuations. It's the final sin stock, this time in the category of alcoholic beverages. It's an under-the-radar company, just chugging along. It's traded on a very small market, so doing large trades is pretty hard. Their dividend history is great, and even if they don't hike the dividend every year, we get compensated with a high dividend yield. 4.78% of my invested capital, and the yield on cost is 6.28%, with a yearly income at $300. Here, my total return is 3.43%, but this year's dividend will bump that a bit higher. We have covered tobacco, gaming and alcohol, but now, let's talk about something every investor loves, real estate. Position number 3. Cibus Nordic Real Estate. A real estate investment company specializing in grocery-anchored properties across the Nordic region. This focus ensures stable, recession-resistant rental income as grocery stores remain essential businesses. Cibus has a strong track record of monthly dividends, making it attractive for income-focused investors. One of a few real estate companies that didn't slash their dividend during the rate hike cycle of 2022 and 2023. It was a small position until recently when I doubled my share count. And I will make a video focusing just on Cibus in the future. I've owned them since 2020 and they keep that income flowing. I have 5% of my invested capital in Cibus and my yield on cost is sitting at 5.94% currently. My yearly income is just shy of $300, $297 to be somewhat precise. The total return is 1%, but keep in mind I just doubled my position and the dividend alone will bring that up during the years. And speaking of real estate, no dividend portfolio would be complete without the next one. Position number 2. Realty Income. Nicknamed the monthly dividend company, Realty Income is one of the most popular REITs in the world. It owns a diversified portfolio of retail, industrial and commercial properties, leased to tenants like Walmart, Walgreens and 7-Eleven. With over 25 years of consecutive dividend payments, Realty Income is a cornerstone for many dividend portfolios. Honestly, could you imagine a dividend portfolio without the monthly dividend company? I rarely get the chance to buy this company at a decent price, but I managed to more than double my shares at around $52 during last year. Taking a look at my invested capital, we can see it sitting at 5.9%, and I will of course buy even more when the opportunity comes around. My yield on cost is sitting at 6.05%, with a yearly income of almost $357. My total return is 15.24%. And now, we have arrived at my number one holding, the backbone of my portfolio and my first ever investment. Are you guys ready? Position number 1. Exact Nordic High Dividend Low Volatility ETF. An ETF designed for income and stability, investing in high yield Nordic stocks with a low volatility approach. It provides diversified exposure to some of the strongest dividend paying companies in Sweden, Finland, Denmark and Norway. A solid core holding for investors seeking passive income and reduced market fluctuations. Ah yes, Sweden's own Dividend Growth ETF. It makes me a bit proud. This is actually my first investment. They have a very good track record of hiking its dividend, and the biggest hike during the time I've had it in my portfolio was 21%. Absolutely massive. Another holding I really want to add a lot more into. But I rarely get the chance to get in at a really good price. But sometimes it will happen. I have 6.22% of my invested capital in Exact, and my yield on cost is 6.07%, with a yearly income of roughly $377. I have received over $850 in total from Exact, and at this share count, that number will be $1,100 at the end of the year. But I hope I will get a chance to get even more shares. My total return is 33.94%. For the autistic and mathematicians who have watched this series about my portfolio, you might sit and think, hold up, the percentages doesn't add up, something is missing. And you're right. The rest of my portfolio, about 14%, is sitting in a monthly paying savings account. I keep some money on the sidelines to be able to buy if the shit really hits the fan, and as a buffer for my own company. If anything happens to my business, it's always good to have capital on the side. For instance, I bought a car for my employee last year, and I didn't have to go to the bank to take an expensive loan. I simply turned on Galaxy Brain mode and loaned the money to my own business, and now I'm paying myself interest on that loan. The interest rate in the savings account is a measly 1.75% currently, and is bringing me about $20 per month pre-tax. It's better than nothing, and I can take out the money whenever I want and get interest on every Swedish crown every day. And that's it, my entire dividend portfolio. But investing is a journey, and I'm always open to new opportunities. So tell me, What are your top 3 dividend stocks? Drop a comment below and let's discuss. If you enjoyed this video, hit that like button, share it with fellow investors, and subscribe so you don't miss any future updates. With that said, I'm the Swedish Dividend Investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!